Good morning, and welcome to the Daily Hunt for Multibaggers. It's Monday, December 8th, 2025, and we're ready to kick off the week by sifting through the market buzz from yesterday, December 7th.
That's right, Ethan. Our AI dug deep into the chatter, analyzing quite a few posts, over 130 actually, flagging several different stocks like NVIDIA, MicroStrategy, and Google, alongside some others.
And what we saw, well, it painted a bit of a mixed picture. There's definitely some underlying optimism floating around, especially with some growth narratives.
True, but our deep dive into the top flagged stock for today, Carvana, revealed a strong undercurrent of risk. While there's a lot of discussion, the overall sentiment is a fascinating blend of speculative highs and deep-seated fundamental concerns. It's definitely a risky start to the week for some names.
Absolutely, and that brings us straight to Carvana, ticker CVNA. This stock has been quite the roller coaster lately, and it's certainly generating a lot of discussion on social media. With its upcoming inclusion in the S&P 500 index, there's a definite buzz about potential short-term gains, forced buying, and some analysts even calling it a disruptor in the auto market. It's shown incredible growth from its lows, which really speaks to its potential for a turnaround.
Well, Ethan, while the S&P 500 inclusion is certainly a significant event creating some market mechanics, the user sentiment we're seeing is overwhelmingly bearish on its fundamentals. Many discussions frankly call it a dog-shite company and express disbelief at its inclusion. We're seeing anecdotal complaints about bounced checks, which points to serious operational instability. Not to mention, there are strong allegations of cooked financials and scammy practices.
I hear you, Brooke. Those are certainly serious allegations. But couldn't the recent record earnings turnaround signal a shift? I mean, if they're cleaning up their act and the S&P 500 inclusion brings more institutional eyes, perhaps those underlying issues could be addressed, and those KPIs might start looking better,
Perhaps, but the current KPIs don't support that optimism just yet. The price-to-earnings ratio, for instance, is an astronomical 90.86. That's extremely high, even for a growth company, and it really flags severe overvaluation compared to its earnings. And then there's the debt-to-equity ratio at 192.41. That indicates the company is heavily leveraged, echoing those concerns about it being near bankrupt in the past. These numbers, frankly, do not scream fundamental strength, regardless of any short-term market pumps.
It's true that those numbers are tough to swallow for a value investor, but sometimes market sentiment can drive a stock for a while, especially with news like this.
And that's where the risk lies. Also, it's worth noting that insiders have been net sellers, offloading over 800,000 shares in the last 6 months. That's typically not a vote of confidence from those closest to the company, especially during a period of rapid price appreciation. Our AI analysis shows the stock was previously rated stay away on December 3rd and December 6th. Given the persistent fundamental concerns and the incredibly high-risk KPIs, despite the S&P 500 inclusion, our AI-generated insights maintain a stay-away classification. The current news might be changing short-term perception, but it's not changing these critical fundamental ratios.
All right, Brooke, when you put it like that, it's hard to argue. For all the speculative excitement, the data points to too many red flags. So for today, Carvana remains up, stay away for us. All right, let's wrap up today's market commentary with our final classifications for deeper analysis. Investigate as buy. None. Investigate as cautious buy. None. Investigate as speculative gamble. Carvana Co. CVNA.
Remember, this podcast is for informational and entertainment only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses. The market is a wild place, and knowledge is your best asset.
Indeed. That's all for today's Daily Hunt for Multibaggers. Thank you for tuning in, and we'll catch you next time for more AI-generated market insights.